Hello and welcome back to the channel. Thank you for watching. And please like, subscribe, and share. So today is Chapter 3, Property and Casualty Insurance Basics. So please remember that you should enroll in a course for the adjuster license. I am just going over some of the content needed to pass the exam. I recently used Excel solutions for my P and C license and the Life and Health license. I also used a code that I found from Kinky Style's 1980 YouTube channel, and I paid $89.90 with the code she has. Principles and concepts. Insurable interest. The insured must have a financial interest, ownership either full or partial, in the subject of the insurance. Insurable interest must exist at the time of loss for the insurance to apply. Underwriting. The function of underwriting is defined as hazard recognition and evaluation, risk selection, pricing, and determination of policy terms and conditions. This department is responsible for underwriting applications and accepting those which meet our new business underwriting guidelines. Rates. Rates reflect the price of insurance for each unit of exposure. Insurance companies established rates by using statistics based on prior losses and costs to determine how much each unit of exposure will cost the insurance company. Hazard is any condition that increases the chance of a loss or increases the frequency or severity of loss. There are three types of hazards. Physical hazard is something that can be seen, touched, or felt that increases the probability or severity of loss. Moral hazard is a characteristic of an insured based on their present actions that display an indifferent or an I don't care attitude. Moral hazard is a subjective characteristic of an insured person and is usually based on past actions that may tend to increase the probability or severity of a loss. Property versus casualty. When a customer buys insurance, they are actually protecting themselves from two types of losses, either property or casualty, also known as liability. Home or auto. The property portion of the insurance policy protects the insured for direct losses to the property they own. The casualty portion of an insurance policy protects the policyholder for injuries or damages the policyholder is legally liable for. Negligence. There are four elements that are considered in a case of negligence. The first is the existence of a legal duty to act or a standard of care. Second, actual damages or injuries that are sustained. The failure to perform a legal duty, and approximate cause relationship between the negligent act and the resulting damages. Negligence laws. Comparative negligence. Comparative negligence laws permit the injured person to recover damages even though he or she contributed to the accident. He or she may recover damages from the other party as long as his or her negligence is 49% or less. Contributory negligence. Under contributory negligence law, a person cannot recover from the other party if that person contributed to in any way to the accident. Also keep in mind that Texas is a comparative negligence state. Damages. Compensatory damages are a combination of special and general damages and are designed to compensate an individual. Special damages may be awarded to compensate the victim for itemized losses such as medical bills, loss of earnings, and property damage. General damages may be awarded for damages that cannot be specifically itemized such as pain and suffering. Punitive damages are awarded in instances of gross negligence and are intended to punish the wrongdoer for their reckless disregard for the safety of others. Topics you should know for the exam. Absolute liability. Certain activities impose liability without regard to fault or negligence. Vicarious liability. This is liability that is imposed on one party as a result of the actions of another. Limits of liability. When purchasing insurance, the insured must not only decide how much protection they would like to purchase for their property, but also know how much protection they need for their liability. Splits limits. Separate limits apply to bodily injury and property damage. In addition, BI is subject to person maximums as well as per occurrence maximums. Texas minimum policy limits are as follows: $30,000 per person for BI, $60,000 per occurrence for BI, $25,000 for property damage per occurrence. Must know information. Aggregate limit. The maximum amount that would be paid during a policy term for all damages arising out of one or more occurrences. Aggregate limits are usually found in commercial auto and homeowners. Any event that causes a loss is referred to as a peril. The terms loss and peril are interchangeable. Examples of perils are fire, lightning, windstorm, etc. Fire can be characterized as friendly or hostile. A friendly fire is one that stays within its boundary and under control. A hostile fire is one that is out of any boundary and out of control. Extended coverage perils. You will usually find this on basic property policy forms. Riot, explosion, vehicle, civil commotion, hail, smoke, hurricane, airplane, windstorm. The key words to recall the perils are Rev. C.H. Shaw. A named or specified perils policy will list the perils that the company will protect the property against: fire, hail, etc. An open or all-risk policy covers the insured property against all causes of loss unless the cause of loss is specifically excluded. Direct loss is damage to property caused as a direct result of the peril. For instance, when a house burns down, all items that are burned or destroyed inside the home will be considered a direct loss. Indirect loss. After the peril has resulted in direct damages, there are also indirect losses that occur. For instance, the cost of a hotel while the home is being repaired, the loss of earnings from time missed from work, the additional cost of eating at restaurants while the home is being repaired. These are all examples of indirect loss. Loss valuation. A property insurance policy will state exactly how it determines the value of the insured property in the conditions section of the policy. There are several ways to value property, and you need to be familiar with all of them. Actual cash value, ACV, is computed using today's replacement cost, less a suitable percentage of depreciation based the item's useful life. Replacement costs provides for coverage on the basis of full replacement costs without a deduction for depreciation. The property must actually be replaced. Functional replacement costs. This occurs when the property becomes obsolete due to its design or because of the technological advances. It provides for replacement cost valuation on partial losses or market value if the property is not replaced, or the cost to replace the property with the closest equivalent. Agreed value method is when the amount of insurance scheduled on the covered property is agreed to be the value and will be paid in the event of a loss. Stated amount is a scheduled, specific amount of insurance. Normally appraisals are required, but in no event will a person receive more than actual cash value. A valued policy is written for the full value of the insured property. If full value to insurance is not carried, it is similar to violating a 100% coinsurance clause. The insured will be a contributor to any loss payment in an amount in proportion to the deficiency. This concludes Chapter 3. I hope this helps you with your studies. Thank you for watching. Please don't forget to like, comment, share, and subscribe.